What is going on, traders? In this video, I'm going to perform a top-down analysis on XLM because price is approaching an area in which it can react from for potential swing trading opportunities. So let's get straight into it. Starting here on the monthly time frame, what we can identify from a monthly perspective is clearly the market has been bearish since taking out this high, forming the significant high ever since we formed lower highs and lower lows. Recently, the market has formed a new lower high at the psychological level of 20 cents. So we've mitigated this monthly supply zone and started to push to the downside. However, if we have a look at this price action here, now this particular bit of price action, you can see the market was consolidating here. This is the last monthly lower high that pushed the market to the downside to create a sweep of the lows, right? We swept those monthly lows here from this high. Then the market tapped into this demand zone that we have here and since made a bullish market structure shift, breaking above the previous lower high formation. So we have a bullish impulsive move, a retracement move, and a higher high here from a monthly perspective. Now the market is approaching a level of demand where it can potentially react from to the upside. Now let's drop down to the weekly time frame. What we can identify from a weekly perspective is that market structure shift is even more visible. So like I said, sweep of the lows, then the bullish market structure shift and the higher high. So since the higher high and the impulsive move, which was off of the back of XRP Ripple winning the lawsuit against the SEC, this created this bullish impulsive move, this move with momentum and the higher high. Price has now, as I said, made the retracement move, and this is potentially providing us a nice entry opportunity. If we take our Fibonacci from the low to the high of the impulsive move, we can see that the market come into the 0.618. Then we saw this weekly bullish engulfing candle, which would have induced traders to buy this level of previous resistance, turn support in confluence with the 0.618. As traders got induced off the back of this weekly bullish engulfing candle, where do you think their stop losses were? Their stop losses were specifically below this low right here. Okay, so the market made this trap bullish engulfing candle, then broke back down and swept the liquidity of all the retail traders that bought that candle, anticipating this bullish impulse correction continuation pattern. So now the buyer's liquidity, in other words, the sell side liquidity, has been removed below this low. I see better potential trading opportunities to the upside. Now, as I said, the weekly time frame, we are testing this level of demand. Now, this is a level of demand in which the market can easily react from. Now, if we drop down to the daily, what we can identify from a daily perspective is since making the impulsive move, taking out the external liquidity that was residing above this high, the market has made the corrective move targeting the internal liquidity that was created during the impulsive move. In other words, filling this imbalance in. Not only have we filled in the imbalance, but like I said, we're approaching psychological level of 10 cents. We're also approaching the 0.786 Fibonacci, as I just shown you, and we're also approaching this weekly demand zone, okay, that I've just identified. So we have a zone of confluence here where the market can easily react from. So this gives us potential trading opportunities. Now, if we drop down to the 4-hour time frame, price action is even more clear because here on the 4-hour, we have a very nice manipulation. Now, what do I mean by manipulation? Not only do we have these equal highs, which was not the manipulation I was just referring to, but it's just something I've just spotted. So this gives us more confluence as well. The market should draw on this liquidity above these relative equal highs. But not only that, okay, not only that, you can see here we had a level of support, right? We have support, 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 support. Residing below this support would have been a huge amount of stop orders. The market has swept those stop orders, okay? In sweeping those stop orders and breaking below this support, the market would have also induced traders short. Now, if we just zoom back out momentarily to the daily time frame, you can clearly see disregarding this little fake out, or you could even take it from that high right there. Yeah, that's even better. we have this beautiful wedge. And if you follow my channel, you will see time and time again how these wedges are used as inducement. What do I mean by inducement? Now, institutional traders can't simply buy and sell with the click of a button. They need a vast amount of liquidity to fill their orders. So they create the liquidity by using these trap formations. The market maker will create the liquidity where it needs to be so the institutional orders will get filled. Okay, so here the market broke this level of support to the downside, taking out all of the stops below this low. Now, breaking to the downside has also induced sellers into the market. Where do you think the sellers' liquidity is going to be? Above the highs, right? Not only that, but if you look to your left, look at that beautiful, beautiful level of imbalance that we have exactly here. That is the origin of the move which broke structure to the downside. If you can see, this was a previous higher low. We have the low, we have a higher low. This was a zone from A to B which broke that structure. So I do expect price to come back up into this level right here and potentially even break higher, given the fact that we've got these equal highs here. And given the fact that we've got this trend line liquidity here, and given the fact that this is a crucial level in the market from a weekly demand perspective, and I have a very bullish bias on XLM and XRP in particular in the crypto market, the Bitcoin halving is approaching in 2024. So this could provide potential buying opportunity. Now, I am DCAing into long-term spot positions on particular cryptocurrencies, including XLM, and I will continue to DCA into this level, even if price breaks this level, because it has to be said, there is still a double bottom here. We could easily break that level and come into that fair value gap here. And if price does do that, all I'll simply do is continue to buy at lower prices, right? Because I have a bullish bias based on fundamental analysis. So, in regards to intraday trading opportunities, because of the reasons that I've already explained, this area right here is an area in which the market can react from for a potential leveraged position. Now, as we speak, price is about to take out the low of the previous day, where the stop losses are, and potentially tap into the 50% of this order block. All inside of this area right here is where I am going to be monitoring with students for one of our potential valid entry confirmations on the lower time frames to potentially look at capitalizing on this move to the upside. Thank you for listening, guys. If there's any other cryptocurrencies you'd like me to analyze, please feel free to join our free Telegram group. We regularly do polls. Yeah, take care, guys. Speak to you later.